friends, here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is June 24th, 2013, and today I will be covering a few key pairs for you guys. And let's just start out with the Euro Pound. With this pair, we're currently on the 4-hour charts, and then within that, we're just seeing that we have been entrenched in a corrective phase. So we had A, B, C giving us that larger A wave, and then now we should see that larger B terminate somewhere in the region of 87.50. So now within that larger B, we see we had A, then working on that B, and then we should get that C wave. So now as we take a closer look, that A, just from how this wave is set up, we see that the B wave, that final C wave, it appears that it would be smaller than 100%, so it should have a 61.8%, just how it's playing out thus far. And a 61.8% relationship with wave A gives us a terminal point at this ascending trend line right here. So we should see wave B bounce off this trend line. So this would be a good opportunity to get long on the bounce of this trend line. So at 84.5, we even might see a wick push through the trend line and then prices reverse and push higher. So definitely expecting that to happen. And then from that point, we should see either a 100% move, which would give us something towards 87, which is what I'm expecting, or we could see a 161.8% move, and then that would be beyond the beginning of that A wave, that larger A, and then this would put us at a flat correction. But it appears it might just be slightly under, so we should see a 100% move towards 87.87. Another pair I wanted to look at was the Aussie Kiwi, and this pair is very interesting at this time. It appears that we are in a flat correction, and we just want to see if it will be a running flat or an expanding flat. So now with this, we see that the wave A, then wave B is shot past the beginning of wave A and pushed towards 38.2% below. So it's shy of that, and then now we're seeing that this wave is starting to take off. And the reason it appears as if it's taken off is that with this pair, we're seeing an impulsive move, as see with wave 1 and wave 3 has a 1 to 1.618% relationship. As you see, it's the extended wave. And then in addition to that, we see the volume pick up in that wave 3. Within wave 1, represented by the green bars, see with the wave 1, the volumes are rather low. But with wave 3, we see a pickup in the volume. Then once we get back to the 5th wave, we see the volume a little lower. So which indicates that wave 3 is the extended wave, which is shown in the price action. And then also we see wave 4 is a flat correction, so we see that A, B, C, and then that 5th wave was about the same distance as wave 1. So now we're just looking for wave 2 to round out, and then we should look towards wave 3. So what we'll do with this pair is, it appears that it bounced off of the 50, but that move up from that point has been very choppy, so we're clearly still in that wave 2, so we should see a move lower. So we should see something pushing a bit lower, and then we should look for this pair to go higher. So a good area to get long this pair is about 1.18, and then a stop loss, tack like a 60 pip stop loss on that. But a 1.18 would be a good area to get long, or even if you can catch it at the 76.4% fib line. that would be a good area to get long as well. Or we could just wait for that confirmation with a break of that descending trend line. Because as we look on the hourly charts, we see that that trend line has been intact for over a month now. So we could wait for a break of that trend line and retest, and then look to go along that point as we see that this pair should be pushing higher. And also we take a closer look at the targets for this pair, and we're seeing that the 100% target would put us at 120. So if we catch it on the break, that would be about a 70 to 80 pip move. Or if it pushes towards that 1.618 level, then we should see prices push towards 1.22. And then at that point, that would be over a 200 pip gain. So that's definitely what we're looking for at 1.618 level. So we'll just watch this pair and continue to monitor as it rounds out wave 2. And then upon a break above on that wave 3, we should look to go long and look towards the 122. Another pair I wanted to look at was the Singapore dollar. And the Singapore dollar is interesting at this time is that because it's trading within a channel, and that channel is indicating that it's within a flat correction. So let's just wait till this chart pops up, and then we'll take a closer look at that. But prices on the Singapore dollar have been pushing higher, which indicates that we are in a bull market for this pair. So we had that wave 1, 2 to retrace about 61% of 1, a little bit over that. And then that third wave, we see that has already begun, but it has not rounded out as yet. It already surpassed 100% move of wave 1, so now our next target is that 1.618 level, giving us target at 1.285, around that level. So we should see prices push towards that level. Then now as we take a closer look at the impulses within wave 3, just drop down on the 15-minute charts, get a closer look. And as we take a look at those waves, we see wave 1 retrace slightly beyond the 50% mark. Then wave 3 was actually the extended wave, just a tad shy of touching that target, but clearly the extended wave. And then wave 4 we should see somewhere around 50% as well, as wave 2 did that. Just the laws of alternation show that we should see something around 50%, which would be at slightly above 1.265, about 1.266. So we should see prices push towards that level and then take off. And then another thing we can look at as well is that we see with the A wave, then the choppiness is the B. And we can even move this over here as prices push up there. And we were looking to go short this pair at 1.2767. So around this area right here. So right now would be a good opportunity to go short if you did not catch it up on the open in the market. But just to show, we were looking at the level of 1.266 or 1.267. And now as we take a look at wave A and see if we can get a 161.8% move, and we see we have the target of 1.266. So that also lines up with our 50% retracement level. So we definitely should see this pair push towards that level, so we can take advantage of this lower C wave, and then once it hits that level we can look to go long again to take advantage of the fifth and final wave within that third wave extension. Also another thing we can look at is that trend line. So we could, if we see prices continue to move sideways before the C wave finally decides to take off, we could see prices bounce off that level. The 50% level is right here, which is not too far from that trend line. So if prices continue to move sideways a bit before taking off below, we could see a bounce off that trend line, which would further validate our reason to go long at that level. So we can look to just ride this down and then ride it back up. So that's just the video for today. Just touch on those 3 pairs. Any questions or comments, you can feel free to contact us in the chat room. Paul or myself will gladly assist you with any questions you guys may have. Hopefully you guys have a safe week trading, and good luck.